Good afternoon, everyone. This is Dan Bird with the Daily Scan for Election Day, November the 5th, Tuesday. Got quite a bit to cover today. The market did well, which didn't help with the options that I did yesterday, but I was just playing around with that just to show folks how to do it. I probably would have spent more time if I actually did lose money on it, but I'm going to show you that in a minute. But let's take a look at the market first and see what's going on. So first thing I want to do is go through this disclaimer. I am not a financial advisor. I cannot give advice. Anything that I talk about here is not advice or recommendations on something to buy or sell. I don't know what your risk tolerance is or your investment profile, so you have to figure that out and make your own purchases. This is strictly for educational purposes. That's why I do this. So let's first take a look at the market bias. And as you can see, we had a nice update today. So the market had been rolling over, but I'll show you on some of the charts that even though it felt pretty good today, it really didn't make too much of a dent in the overall downtrend. So we're going to have to see if it continues, and I think it probably will. We're going into the strongest part of the year. We have the Fed meeting on Wednesday and Thursday. The Fed probably will cut by a quarter point on Thursday. The market will probably like that. So I think the market probably will continue to go higher and maybe right into the end of the year, unless there's, the election gets extended. The results of the election gets extended for some reason. So we'll see. On the total market trend, it's now fully bullish. So it's a green right there because the short term for the VTI actually gave an up signal today. So short term, medium term, long term are all bullish. I'll show you what the charts look like and I'll explain what I meant. So here's the NDX, the NASDAQ 100. You can see right there the small up move today, but there wasn't much of one. So just went a little bit. It did get over the 21-day moving average, which is positive, and it ended near the high of the day, which is also positive. But it hasn't made a huge dent in this pullback that we've had since last week, and we still need to close the gap that's right there. So if we look at that on the S&P, same thing. You can see that the S&P also has not closed the gap. It actually is not above the 21-day, even though we had a nice update also on the S&P. Both of those have breached this bearish wedge right here. So what we want to see is, number one, it needs to hit certain levels above the 21. It's be nice to close that gap. And then, of course, back to the all-time highs up here. So we'll see if that can happen. Volume, by the way, today was below average. So on the S&P, it was below average. On the NASDAQ 100, it was below average. In fact, it was less than even yesterday. Yesterday was a down day, but not really a big down day. But volume today was even lower. So that's not a good sign. But like I said, there's some catalysts coming up. If we get a clear winner in the election and then the Fed cuts rates, I think all of that's going to help the market. Now, the NASDAQ 100 never did get back to its all-time high. So it's struggling to get back up there again. So that's what that looks like. Let's take a look at the dashboard. So you can see the Dow, everything Dow, S&P, NASDAQ, about 1 to 1.5% roughly gains today. So there's the Dow, there's the S&P, there's the NASDAQ. You can see all of them ending near the highs of the day. The VIX still over 20, but it pulled back today, which is good, but it is still over 20. So NASDAQ 100 also had a nice day, pulled back a little bit, but ended right near the high. If we go down and look at the sectors, I'll look at those in a second on a different view. The industry groups today were a mixture of aggressive and defensive. So we had some technology in there, some automobiles were in there, so that's discretionary. There's industrials, real estate, the materials. So really quite a mixture. And then interestingly, on my top 10 list, Palantir, of course, had a great day. And I mentioned that last night. I said that it was probably the one that would break out of, rather than a failed breakout, it was actually going to break out. It was up 23% just today. So it had a great day today. The next one down here, Payoneer, which was one of our top 10, also had a great day, almost 21%. And Powell, which is one that's on our daily scan list, Powell had a good day today too. In fact, it broke out above its previous high. So Powell might continue to go higher, up 9.5%. We'll take a look at those. But all of these, Upstart also, you'll see appeared on the list as well today. But all of these are on the top 10 list. And where you can find that is on the charts page of the website near the bottom. Every week I update this over the weekend. So these are the top 10 in 3 categories. The IBD 50, which is basically their ETF, which anyone can get access to. You can see what those top 10 are. The ones that have beat earnings and revenues is this one here, and the one on the left-hand side are relative outperformers. So ones that have outperformed their own industry group by 10% or more and outperformed the S&P by 5% or more. And you can see Palantir is the only one, and this was updated last week before earnings. Palantir is the only one that's green, so the only one that's in all 3 lists. Remember this one, VRT, because that's one that appeared on the scan, and I actually added it to the scan list as well. So that one appeared on the IBD 50. Anything in an asterisk is brand new for the week. And then, of course, the large cap, mid cap, and small caps, the top 10 in each of those as well. And the ones that are brand new to the list. Powell just appeared here in the small cap list last week. And then what I do every week is I consolidate all of these, the top 10s up there, plus all of the ones that made the top 10 list at some point in the past. So many times, like down here, these dropped out. You can see NVIDIA dropped out of the top 10. But that doesn't mean it's bad. It just means it might be number 11. In fact, I think that's probably going to come back up into the top 10 this week because it actually had a nice, you can actually look at it. You can click on any of these and get the chart. You can see NVIDIA is starting to pull back up. They have earnings on the 20th. So that one probably will make it back into the top 10 again this week. But that's where that top 10 list comes from that I just showed you before. Every week I update this. Right now there's 240 stocks in it. And that's what I use to run the daily scan against. Okay, so some other things I want to show you. Bias chart I showed you. We can look at the bias page to get a little bit more detail. You can see these are a lot more green today. So that's what it should look like whenever we get an update on the bias chart. You can see up here, these have not turned green yet, though. This is the day over day and week over week trend. And it went from green to red and yellow to kind of neutral and then back to red. And then it's now just starting to go back to neutral again. So we like to see that to continue to go higher. At the bottom of this page, I update this every week as well. So it's the top 20 year-to-date gainers on large caps and losers on large caps, and then the small and mid cap gainers and losers as well. And this gets updated each week, and you'll notice Lumen, which reports today, it looks like they're down a little bit after hours, so I'm not sure what their report is saying, but they actually report today. But that was at the top of the small and mid cap list. All right, what else? I want to show you the VIX. So let's go back to the charts page and take a look at the VIX for today. As I said, it's still over 20, but starting to come down. So it's coming down now, but we'd like to see it below 20. Actually, below 17 would be ideal. The S&P, you can see, started to move back up. So the VIX is inversely correlated, so it should go down. However, the moving average lines are still moving higher. So the faster line and the slower line are actually separated and accelerating away from each other. So that needs to change for the VIX if we're going to see more upside ahead. And then the 12-month rate of change is still continuing to go higher. So while we had a positive day today, and if we get another great day tomorrow, the VIX should come down below 20. which will be good. And we'll see what happens after the Fed meeting. I think the VIX is mostly related to the election right now, the fact that it's over 20. So once the election is behind us, hopefully without getting extended, and then we get the Fed meeting, I think the VIX is going to drop pretty significantly, probably below 17 again. And when that happens, the market will continue to go higher, probably into the end of the year. Okay, a PE chart. So since we've got a lot of earnings, and this week is the biggest week for earnings, most of the big cap technology stocks reported last week. This week is a lot of the S&P stocks. But in here, I have a price to earnings ratio chart. So we'll look at that. And what you can see is this is the S&P up here on a weekly basis. Here's the VIX where it crossed over. The VIX is starting to trend higher here back in August. This is a weekly chart, so it takes longer. And you can see how the moving average lines are separating. So that means the VIX is accelerating to the upside. The PE ratio is right now at 29.5, right there, and getting very close to 30. And you can see that it's been ramping up all the way since 2022, actually since we hit the bottom in October of 22. And the last time it was at 30 was in this area over here in 2021 and 2020. So we hit 30, went up, and then started coming back, hit 30 again right there, and then dropped back down. So 30 is elevated. I have a red line across here at 25 and 20, green line at 20. So somewhere in that range is pretty much usually a standard PE ratio. But the economy has been very good, and the earnings have come in very strong. So the PE ratio continues to ramp up. However, even with the PE going up, you can see that earnings have not yet taken out the previous highs. Back here in beginning of 22. 22 was a bear market. You can see from here to here, pretty much almost the whole year, the market went down. And the earnings hit their high right in this area and then started to pull back. And they have not yet taken out this high from back here. So even as the PE ratio goes up, the earnings themselves are going up as well, but they haven't quite taken out the high yet. So I'll have to keep an eye on that and see what happens. The next thing is the put call ratio. I want to show you that. We'll look at that on a 10-day moving average. So the put call ratio, this is, think of this as the number of puts versus calls. And if it's at the bottom, if it's moving down, that means there are more calls. So it's a put call ratio. It's basically just a division with puts on top and calls on the bottom. So if it's at the bottom down here, that means there's mostly calls, which means everybody is long. So we got right down here in the month of October and stayed in this area for quite a while. In fact, below this pink line. So that's extremely bullish. You can notice right here when we hit those areas, usually when we top. So when we hit the trough right there, we've got a small top right there. Right here during this period, this was a very strong, this is 2021. Actually, no, it was the beginning of this year. It was a very strong bullish period. When we get to the top of the put call ratio, that means there's more puts. So it's more bearish, more people are negative. And usually when we get up near the top up there, that's usually where the bottoms are put in. So there's a top right there and a bottom right there, a top right there, a bottom right there. We're just now starting to go back up. So whenever this starts to go back up, you can see it's usually in a downtrend. And this is a good example of what I was saying. Even though we felt like a pretty good update today, it's a green bar and it's above the 20-day moving average, the 21-day actually, which is positive, but it didn't put too much of a dent in this downtrend. So we really need to see a lot more upside before we can really start to get comfortable. And with more upside, this is going to start to drift back down again. So there'll be more calls once again, and we'll get down into this area. So that's something that we'll watch and keep an eye on. Okay, the last thing I wanted to show is the 50 and 200-day relationships. So we'll look at that here on the NASDAQ 100 because there's 100 stocks, so it makes it pretty easy. Here's what I was talking about with the put call ratio. It's extremely overbought, so lots of calls down here. You can see last time this happened, it's after the peak and when it started to move lower. Same thing here. That was the top. So we've been in this area for quite a while. What's below that is the percentage of stocks above their 20-day moving average right here. And you can just look over here and see the number. So since there's 100 stocks in the NASDAQ 100, you can see the number that are above the 20-day, and there's 47 right now above the 20-day moving average. The 50-day moving average right here, the pink line, is the 50% point. There's 57 stocks above the 50-day moving average. 200-day moving average, there is 56, so almost the same. And what you'll notice is whenever it gets extreme, whenever there's very few stocks above their 20, 50, and 200-day moving averages, that's usually where we get close to a bottom. So you can see where that correlates up here to the price. So usually when we get down here to this 20% area, and 20% on the 50 and the 220, and on the 200, it's about 45. That's when the bottoms are put in. We're not really close to that right now, other than the 200 came down quite a bit. So hopefully these are going to move up as well. And if we do get a rally, they should move up back above 50%. So just something that's interesting, something to watch, especially when we get a huge sell-off like we did between July and August. This is the chart that I like to use. I actually have a chart right here on the charts page that says Best Bottom Finder. So that has those in it. So the Best Bottom Finder actually can show you where the bottoms are, where the extremes are. There's the 50-day and the 200-day. Here's the VIX, way, way above 20. And here's bullish percent and the advanced decline lines. Those, you can see where they typically will bottom out whenever the market bottoms. Right now, we're still pretty far away from that. So the market really is just bouncing off of its 50-day moving average right now. And all the momentum indicators are starting to turn higher. So we may actually get that rally into the end of the year and could hit 6,000 on the S&P. We'll see. All right. We'll take a look real quick at the S&P chart on the home page, which I looked at before. So again, this is the S&P. So it's got some work to do to get back up to its all-time highs, but some positive catalysts coming. So unless we get an extended election result, I think that we are probably going to go back to the highs up here, 58.70, and maybe through them to 6,000. All right. Next is the daily scan. So what I'm going to do for the daily scan is I'm going to show you the scans. I've already populated the spreadsheet with one that I just added, and I'll show you what that one looks like just so you'll see it. I actually added two. So we've got the VRT is on here now, and Upstart is on here now. So those are the two new ones that have just been added. By the way, I did add this spreadsheet to the website. So for those that are interested, those that are annual members, if you go to the portfolios page, right down here where it shows the total market status, here's the paper trade worksheet right there. You just click on that button and click on this, and it will download it into your downloads file, and then you can just open it straight from there, save it. Now, it's from yesterday, so it's not going to have any of the new stuff in it. But it's just basically for your own use for paper trading, and this is all educational. So paper trading is something I recommend till you get used to reading charts or figuring out how you want to trade. It allows you to see whether your decisions are correct or not without losing a lot of money. All right, so let's look at the scans for today. And here's how I'm going to do this. We've got, I think, 3 scans. We have the downtrend reversal scan. So these are the ones that hit, 13 of them today. I am going to, this will kind of give you a sense for how to use stock charts as well. Stock charts just had a big sale. I sent that out to everybody, which I think ended yesterday, but sometimes they extend it. They well usually will do one around Black Friday too. So if you want to sign up for stock charts, those are really great times to do it. This one they gave you 3 extra months for free if you sign up for the annual membership. But this is going to give you a sense for how I use stock charts. I'm going to go through it pretty quick, but you can always watch it back. Okay, so these are the ones from the downtrend reversal scan. I'm going to save this to, I'm going to replace a list that I call my scan dump. This is basically just a chart list I can just dump stocks into to do different things with them. There's all the stocks. Now what I want to do is I'm going to go to the edit and I'm going to merge all of these stocks into my daily scan list. All right, and then I'll go to the next one. These are stocks near the 21-day moving average. There's only 2 in this one. Notice Palantir is there. So I'm going to replace the scan dump list and then click on edit and move these, select all. This little button here says merge selected cells, selected charts. And what this does, so I'm going to merge this into the daily scan. What this does is it merges it, but it will not have duplicates. So if there's something that's already in there, it's only going to put one of them in there. The next one is the downtrend reversal with the green elder bar. This one has 17. I'm going to replace the scan dump list and we'll edit these and again select them all, merge them into the daily scan list. And I think that is it. Let me look. I think that's it. Yeah, that's it. So we just had 3 today. So now what I'll do is I will go to that daily scan list that I just merged all of those into. And what you can see is we have 32 stocks in here. So what I next want to do is I will look at this as a summary. And this allows me to sort by different criteria. So I can look at sectors. I can look at, the ones that have changed the most. You can see right here. These are also the ones that were on the top 10 list on my dashboard. By the way, you probably recognize them. Palantir is number 1. But what I want to see is when is the next earnings coming up? And in fact, I might also want to see the last earnings too. So I can add those to the chart. And now I want to sort by next earnings because I don't want anything that's too close to earnings. So now you can see down here, these are all 11/12, 12/4. Here's Broadcom on December 5th. That's still a little bit too close in. So I'm going to probably start with this one right here, UNFI. And I right-clicked and open in a new tab. Here's what this one looks like. This one actually looks pretty interesting. Now remember, these have all made the top 10 list. So I can now save this one. So it's outperforming its peers. It has a great accumulation distribution. December 11th is earnings. So I'm going to save this one into my daily scan watch list. All right. And then we'll take a look at the next one, which is Taiwan Semiconductor. Taiwan Semi actually looks pretty good too, except for the accumulation distribution. I think I'm going to pass on that one. Columbia Bank, actually what I want to do is I want to look at the industry groups as well and the sectors. So I'm probably going to pass on Columbia. T-Mobile is a nice uptrend. They report in January. T-Mobile, it looks pretty good. Accumulation distribution outperforming its peers. So I'm going to save that one to our watch list. Next is, what else? Palantir just reported, so it's had a great run. Specialty finance, recreational, Royal Caribbean reports on January 30th. So if I look at Royal Caribbean, that one has been doing great, outperforming its peers, nice accumulation distribution. So I'm going to add that one to our watch list as well. And then what else? Palantir, this is REITs. I'm not interested in that. This one is insurance. They haven't done too well. Here's VRT. I mentioned that one. It made the top 10 list last week. So this is definitely one, I just showed you that I've already added it. So this is what it looks like. Definitely looks like it's pulled back and it's starting to move higher. It might actually take out its previous 52-week highs. The MACD is turning up, great accumulation distribution, and outperforming its peers. So this one for sure we're going to add to the watch list. And actually we've already added to our holdings. So this is how I find them. Rolls-Royce, this is an aerospace. It's kind of interesting, but it's a foreign company, so there's lots of gaps. I usually don't like something that has so many gaps like that, but Rolls-Royce might be one to consider. Great accumulation distribution and definitely outperforming its peers. So I'm going to add that too, even though it has lots of gaps. So we'll add that one to the watch list. And then I think there's just one more. There's two more. HIMSS reports in February. And this one is very volatile. So this one's a little bit too volatile for me. The way it moves up and down, it's certainly above its moving averages, has great accumulation distribution, but I just don't like how volatile it is. And the last one is Viper, which I talked about last week. It was actually on the list last week. It's broken out. So it just had earnings. So it broke out based on earnings. So I'll add this one to the list. You can see that it's pulled back. So it's probably got a black candle. No, it's got a red candle. So it actually pulled back below yesterday's close. So that could be a failed breakout right there. So I think I'm going to pass on that one too. I don't like the way that looks. So it broke out of the previous 52-week high, but then it failed. So I'll pass on that one. So now we have a list of a watch list to take a look at. We had some other ones in there before. VRT is in there twice. That the way I was doing that did not recognize duplicates. So VRT is one that I'm actually have moved to the stocks that are in our list. So that's how I do that. I just looked at all the charts. If we look at the actual daily scan, the holdings list, there's the three, and Upstart actually is not holdings. It's actually in the watch list right now. So let's actually move that back to the watch list. And take it off of this list. And then go back and move VRT from the watch list to the holdings list. So now this is now holdings. So that's now in the holdings list, and what you can see is I've already added it to the spreadsheet. You can see Upstart's down here at the bottom. We just looked at VRT, so it's added in here. It actually executed. It actually went up a little bit more than this. Powell had a nice day, so Powell took off. Actually, was up 9.5%. So I moved the stop up to break even. So we are now at break even on Powell. So be nice if this continues to go higher. Earnings aren't until December. It very well may. We'll continue to watch it. And then the other one was DocuSign, which DocuSign also had a nice day today, moved higher. So our stop is right on the 21-day moving average. So our goal now is to move that one, move the stop up on that as well until it gets to break even, which is break even is at 71. So I moved it up a little bit today. So we went from 4% to 3% loss if it gets stopped out. And the new one, of course, anytime you add a new one, the stop percentage is going to be higher than the rest. But that's what we'll do. We'll continue to watch these down here. These actually are looking good too, but they might actually start moving a little beyond. So has earnings on the 7th. So we probably don't want to consider that one. We'll just watch it and see how it does with earnings. So that's where we are. You can see these are green over here because they're more than 21 days away from earnings, which is good. And right now, I kind of feel good about what we have in our active trades list right now. All right. The very last thing I will show is what happened with the trades yesterday for options. First of all, we had one that was a zero day to expiration. We were thinking that the market was going to go down, and it didn't. It went up instead. So that one basically expired worthless. I actually closed it just before the close today. So I would have made 500 if it had gone down, but instead it went up and I lost 500. So small loss, that's the important thing. I cannot stress this enough. Do not bet the farm on one trade. That's the biggest mistake that new traders typically make, especially if you're watching other folks on the internet. There's lots of great places out there to learn about options and everything else. So I encourage you to do that and learn as much as you can. But don't think that you can start trading the way that they do. Number one, they are so familiar with their indicators that they can just recognize things immediately. That can take a year or more to get that familiar with the indicators. It's always important to trade small initially until you get very comfortable. The second trade we did was a debit spread. So the expiration is December 15th, I think it is. And right now we're down $90 on that one. So like I said yesterday, if it goes down by 50%, I will exit that one. So this has to go down to about $5 and I'll lose about 400 if that happens. But here's the trade I did today on VRT, and I'll start adding those as we do them from the daily scan list. So this is an actual trade. So I got in at 112 basically, and you can see it went up a little bit today. So up 26 on that one, down 90 on that one. So that's the status of where we are. All right, that's it for today. Thanks, everyone. Hope your candidate wins. Hope we get a quick decision on who the winner will be so that we don't get extended in the election, which could cause havoc in the markets. And hopefully we'll continue to watch this, and especially watch the VIX. I'll show you the VIX each day, and I think it's going to go down if we get a good result in the election. And then the Fed cutting rates on Thursday. I think the VIX will be down below 17 again, but who knows? All right, that's it for today. Thanks, everyone. Good luck trading. Take care.